We have survived to see the end of another week here, and welcome back to Financial Friday here at RE/MAX Property Group. Before we get into what this next season might hold for us, along with the updates on our mortgage rates, we're going to do our quick overview of the Houston housing market as well as economy. All right, getting our overview here from the HAR Weekly Snapshot. Taking a look at new listings up 15.4% year over year. We have pending listings sitting up 36.1%. Off-market listings, so once again, these are the listings that are being taken off. So they go from active to off-market. It's going to be down 32.5%. Nice to see a negative number on that. It means that more are actually getting sold or staying listed. Closings up 42.1% there. Showings up 60.9%. Another key indicator we're going to be looking at now is going to be the Consumer Pricing Index. This is used to measure inflation. This index is a measure of the average change in price over time of a pre-selected basket of goods and services. So it kind of just gives a reference point on how prices are increasing throughout the market. So looking back at March of this year, we can see a 2.6% increase year over year from last March. Much of that being driven by over 20% increase in prices of oil and gas. Now looking at 10-year Treasury bonds, this is used as a proxy basis for mortgage rates, as well as just shows general sentiment on where investors think that the economy is headed. This is now trading today at a lower rate of 1.56%. This drop in bond yield is due to an increasing interest and transition from equity and stocks to bonds, as a lower volatility and less risky investment. In contrast to an equity position such as holding a stock, the demand for these government-backed securities increasing actually drops the interest on them, which is historically tied to the mortgage rates. This new lower Treasury yield brought about a celebration yesterday as we witnessed mortgage rates dropping below 3% back into record low territory that hasn't been seen for months. A drop in mortgage rates is just what this market needed as we come into the spring selling season. Spring is generally whenever the housing market starts to pick back up after transitioning out of the winter. So we start to see a lot of new listings hit the market. And if you're sitting there thinking to yourself, well, that's not going to be me. I'm not going to think about selling my house. Well, you're probably lying to yourself. Taking a look at Google Trends, we can see the searches for sell my house skyrocketed this year, as many homeowners are interested in taking their profit from the increase in housing prices over the past year. While comparatively, we still see a large increase in searches for should I buy a house, especially as first-time home buyers want to take advantage of these record low interest rates that are allowing them to purchase more house. Spring has always been the perfect time to kickstart the market as school is ending, so more families are able and willing to get up and move without transitioning their kids during the middle of a school year. And with nicer weather coming about, it just makes showing houses a lot more pleasurable. Going back and comparing to a normal and steady year, if that's a thing anymore, we can see that new listings start to take off as we move into the warmer months, especially seeing a peak in April, May, and June. Just as these months bring on more listings, they also bring about more buyers. This tends to increase the prices as it makes a more competitive market. But with 2021, if our market madness is already sitting right here, is it possible to see a spark that raises that in the spring selling season? Seasonal market trends have been an interesting topic to follow throughout this COVID era, as it's thrown off many market norms and left many sectors wondering what's to come next. As we saw throughout the winter season, the housing market stayed on fire with no signs of slowing down as traditionally seen within the busier holiday months. So with the market that never really took a break or slowed down, what can you expect to see moving into a generally more populated and active housing season? We are continuing to see a slight increase in the number of new listings month after month, but I wouldn't expect to see a large incremental jump like we've seen in past years' trends. With many buyers trying to get into the market before they see interest rates increasing, as we've seen over the last few months, and now adding another group of buyers that's hopping in right now as we're seeing another round of record low rates that they may have missed previously, we can predict to see an increasingly competitive buyer's market heading into these next few months. As we see a lot of these buyers going into the market because they can now afford more house at a lower financing rate, still do have the traditional home buyers that, as the wisdom of real estate says, the best time to buy a home is when you need one because your life has changed. Whether that be marriage, kids, or any other reason that might need to put you in a home, many people don't have the luxury of waiting forever on a buying opportunity, especially when incentivized by cheap financing and a better seasonal timing. So if we're talking about all these reasons that might increase buyer competitiveness and add more buyers to the market, and one of the things that's gonna come up and you always hear people talk about or you read in the headlines is gonna be inventory. Inventory, inventory. It's thrown around everywhere. Taking a look at what actually is inventory, it's often misinterpreted for it showing that there are no houses for sale because the inventory is listed around 2 months, which is about 1/3 of what's listed for a normal or healthy market. Inventory, when talking about housing, is a much different measurement than inventory if you were taking quantitative data for, say, a retail center or even making your shopping list going through your pantry. Housing inventory is the relationship that shows how many months it would take for all current listings and pending transactions to be sold at the current sales pace. This can often be thought of as a bathtub, in which case you have all the current listings that are coming in being the faucet adding water to the tub, and then your drain being any closings or market listings that are being taken off. So at any point you take a snapshot of that tub, it's going to be your housing inventory right there. So even if you have a high flow of new listings coming onto the market, you can still see a really low inventory just by the speed of closings taking those right back out of the count. This can be distinctively shown by looking here at the Houston housing market, as we've had record low inventory for about the past year now, but we can take a look at the number of actual homes sold and see what that looks like. All right, so going back to 2020 here, we know that the last 3 quarters of the year had what were considered to be low inventory numbers. This often led, like we were saying, people to believe that there were no listings up, there were no homes for sale, you couldn't find them. Looking here, actually, we can compare number of home sales year by year. If we're looking at 2020 compared to pre-COVID in 2019, we can see that actually every single month here, except for April and May, we had more home sales in the year of 2020, even with that record low inventory. We can even see in a recent survey from NerdWallet and Harris Poll that 1 in 6 homeowners are planning on selling their home within the next 18 months. Among those people, 45% said that rising home prices and a lacking inventory has prompted them to consider selling earlier than what they had originally planned. With selling your home at the moment being almost of no challenge at all, I want to focus mainly on the buyer side of things, as even a seller will become a buyer later down the road in the transaction for a new home. Buyers within the past year have seen unpredictable challenges and bidding wars that are not for the faint of heart. This market requires reaction speed and emotional fortitude that has left many feeling hopeless as they watch opportunity continue to pass them by. 2 important things to set yourself up for success as we enter into this spring season. It's going to be 1, set a firm budget that includes your mortgage payment, any insurance, and housing maintenance costs. So that way you have an upfront idea of exactly what you can be paying each month, so you don't trap yourself in a financial hole whenever the emotions get the best of you in a bidding war. And 2 is to make sure that you're able to spend time and sit down with either your agent or someone else who specializes in the housing market. That way you're able to go into the buying process already having realistic expectations and a competitive edge over other consumers. This market knowledge should include things such as turnaround time for any listings, a comparison between the listing price and sales price, the type of financing used, which is going to influence your offer a lot, as well as if someone moved in and needed a lot of renovations off the bat, it's going to be something to kind of throw into consideration whenever you're doing your comparables to understand the market. Having a strict understanding of your own financials as well as thorough market data is going to be the key for you winning offers this upcoming season as you watch those unprepared and uneducated struggle to just get what they can. And that'll be another cliffhanger for the crazy market updates. Just trying to keep you as prepared as possible for the completely unpredictable and sometimes inevitable. As always, thank y'all so much for checking in on another Financial Friday here at Remax Property Group. Feel free to follow me on the social medias so that way you can stay up to date whenever I'm not doing a video. If you have any questions or want to go over certain topics, feel free to DM me, comment, anything like that. We'll try and get those answered. Don't forget, every single Friday and in the week off right with another market update, Check back in next week and we will probably have another bit of craziness ready to go for you.